Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast.
Over the life of the Garbutt Dumas podcast, we've made predictions. We've been correct on most of them, I'd say, Jamie. We have kind of done quarterly market updates, and we wanted to kind of recap 2020 and what we've predicted, what we have seen, and what's changed throughout the year. So we go back to June. We had a market update podcast in June, and the big takeaways from that one were everything was very uncertain. We were talking about, I think we titled that one, Buy Now, Sell Now, or Wait. And we were talking about who is a good candidate to buy in a market like this, who's a good candidate to sell, and who should wait. The kind of summary of that one was, if you're buying and selling at the same time, look at the entire transaction. If we didn't necessarily suggest a downsizer, this to be the right time or right year to make that move. The upsizer move was a lot more financially exciting, seeing that single family homes had come down much more in the last 18 months than the condo that maybe you're upsizing from.
Yeah, one thing I'll just kind of add, when we're talking about recapping the old ones, I do distinctly remember earlier this year, the upper end market was very slow.
Yeah.
So I think that was part of the logic there. I think I can't remember, but for a good few months, there wasn't a sale over $2 million in Burnaby.
Yeah.
There just wasn't much movement. So I think that's one of the shifts that's happened later in the year.
Yeah.
Coming off the busiest September on record in terms of activity and sales in Greater Vancouver. And then the stats that came out recently said November was the second busiest on record. Yeah. So arguably the busiest fall on record, potentially. And the price points have, the higher price margins, so the higher priced properties are starting to move.
That was the kind of last part of that podcast was who should wait. And I think both of us were in agreement of that luxury type home in the suburbs. That was not getting any action at all early in the year. And it seems like every month moving forward in 2020 has gotten busier and more expensive for a lot of products, to be honest.
Yes. Yeah, I feel that the luxury detached in markets like, Burnaby, the markets that were really inflated in 2016, those ones, I think we're going to start seeing those empty nesters, those people that missed out on that wave. I think they're going to start liking the prices again. Maybe not in all those areas, because some of them are still off. Like there was a period of time where you get basically a teardown in Buckingham Heights of Burnaby was $3 million. That's still not there today. We're still at least 20% off that. But at the same time, there's areas in Vancouver that are all-time peak pricing. And I think North Van has a few pockets that are trending that way as well. Well,
your experience last night was a really good example of that, right? Like when did our client purchase that home? A year ago? A year and a half ago?
They bought high. But yeah, basically, we had multiple offers for a prime location lot in East Van last night, and it kind of shows that land value for a nice 33 by 122 is cracked $2 million. And when you look at the comparables, a new home on that lot might get upwards of 3.5. I mean, there was a recent sale for 3.3 for a 2013 built Craftsman. I think it was on East 23rd, just off Main. And those are big numbers. And I wish I remembered the year, but I do distinctly remember a moment where I saw the new homes in Mount Pleasant, East Van crack $2 million. And I want to say it was like 10 years ago, or maybe it's 8. It's hard when time flies by. But that was a milestone. It was like, I remember the milestone when the detached, the average home price index for East Van cracked $1 million, and then a new construction home cracked $2 million. And now we have land value cracking $2 million in these markets. And when you look at the trends, I don't think that's a one-off. Right. I think we just set the precedent for the next one.
Totally.
Yeah.
I'd say we were like, I think maybe let's touch on uncertainty from that June podcast. We were a couple months into a very, very drastic change in Canada with coronavirus. And really, we didn't really know what the future is going to hold. And we're talking about who should buy right now or back in June. And our comments were really, we don't know if the market's going to go up or down. Like, we've never seen anything like this. If you're asking us our opinion, our answer is going to be, I have no idea. I'll tell you in 6 months from now. But like, we just didn't know.
There wasn't enough data, and it was weird. And, you know, even I think we were both pretty optimistic about the market because we felt that 2019 felt like the bottom and we were coming out of that prior to COVID. But you get all this news of people losing their jobs and the economy going and, you know, being a mess and a downturn coming. So you get influenced by that outside news. And I think for us, the biggest uncertainty came from we weren't seeing as much movement as normal because there was less data. We weren't seeing a surge in detached by June that we were seeing in, say, September, October. We weren't seeing those upper price points very active. So there was slow parts of the market at that time. And there was a lot of fear and uncertainty out there because people would, you know, it's weird times. But at the end of the day, rates are low. Buyers showed up. We set some records in terms of activity for month over month in the fall. And now we have a little more clarity on where 2021 might be going. And it's always a guess, but we like to guess. It's fun in guessing, and we're going to try to be a little more specific, a little more bold with some of these. But there's been a number of markets in the past where I could remember the fall giving some hints on how the new year's going. And whether that's, you know, the fall of 2015 that was, you know, dried up on supply and there was nothing available to buy. And then that caused the big jump. It was like a 15-20% lift in 6 months leading into 2016. Now, this is not the same market, but it has some similarities. But at the end of the day, what I feel is there's certain segments right now that are saturated with listings, and there's certain segments that are absolutely tight, and there is not nearly enough available, and there are many buyers showing up with offers. You know, we'll get into some instances that we've run into in the last 30 days soon, but yeah, there's some products that are giving me every sign that come summer, they might be 15-20% higher. And there's some that tell me by summer, they'll be the same price. So we'll see. We'll get into those predictions. But yeah, I think, Denny, just kind of recapping, there was optimism in detached, but it wasn't quite there in June. And you thought one of the predictions you made for 2021 was the 2-bedroom condo turning point, you know, because it's been a little bit soft for the last 2 years. And you thought that, you know, 2 bedrooms might come around, and there's some logic to that. And then I believe I made, you're like, who shouldn't sell right now? And I said Whistler. I said maybe Whistler. Because the U.S. is closed off and who knows what the ski mountain is. But I think pandemic is going to accelerate the desirability of Whistler now that the dust has settled. So I haven't looked at the stats up there, but that was one of the comments we made in June too. So I think
I would assume it's still fairly low because you're not allowed to go up there.
You're not, right? But if you have money and you have any option to live anywhere in BC, Whistler's going to be the front runner for a lot of people. You know, if you don't have to be in the office space, and even when I've been looking at Whistler sales going down, you know, fantasy lane for a while now, and they never there was a little bit of struggle earlier this year, but it never really came off to the extent that I was expecting it to. You know, it never really did. And I think it was just more because of local migration. And maybe there's some foreigners dipping in there that are observing the pandemic stats and don't mind the foreign tax. I would be really curious to know how many people are actually paying that foreign tax and buying, but I don't know if that data's out there. Speaking of that
is actually a really good question.
Did you hear the announcement of the national foreign tax? So we have a BC foreign tax that was announced a few years ago for 15%. And that's what we've been living with.
And it's gone up to 20.
And nationally, there's a 20% one, I think, coming into effect this year. Or maybe it's in effect now, or it's coming into effect in 2021.
So they increased the foreign buyer tax a year and a half ago to 20% in BC?
Oh, in BC,
so
okay.
They rolled it out nationwide now?
Yeah,
nationwide.
Okay. Yeah, nationwide. Which makes sense. I mean, you may not agree with it, but when they first introduced the foreign tax in BC, I didn't necessarily agree with it at the time just because I didn't like the implementation of it. Like, it was just shocking us and just causing headache and disaster, going from 0 to 15% and affecting outstanding contracts that are pending. So the implementation was terrible. And I thought going from 0 to 15 was a lot. But now that the dust has settled, and particularly after a pandemic, if they didn't do this, I mean, there's a chance that our prices might run well beyond what locals could afford. And, you know, it could be that a much more, extreme ghost city of wealthy foreigners owning all the land. So I do understand the logic for certain neighborhoods. I mean, there are certain parts of the city that are completely exposed to foreign wealth if the doors were open without barriers. And that could, I guess this is a big argument. Is it right to have the, nationalism and lock out foreigners from buying our real estate, or is that impeding with growth? And right now I used to kind of feel it was kind of hurting growth a bit more, but now I understand the logic of it, because I just think that our prices could climb out of control. I mean, BC is a shining star in this pandemic, and if people start opening their eyes up to it, there could be a flood of buyers coming up here.
Do we know, how many countries around the world, or bigger countries around the world, have something like that? Does any nationally?
I remember we used Australia as an example when it first came in, and they had a 6% foreign tax, but I don't know what it is since then. I really don't know. Anyway, we should probably not talk about foreign tax if we don't know them. Sorry, Denny.
Should we summarize September?
Let's summarize September, yes.
And then we can
get on to
project.
It. Yeah, project forward.
September optimism was much higher than June. Let's say that. The activity in the market had been crazy throughout the summer, and September was a record month for us. And I know it was for a lot of people around Greater Vancouver. Single family homes went from slow and steady through the spring to outrageously active. Mm-hmm. July, August, September were crazy. Condos kind of remained slow unless they had a specific big selling feature, like a great view or, really desirable neighborhood. That standard 2-bedroom or 1-bedroom condo in the suburbs stayed fairly slow.
The nothing special box in the sky?
Yeah.
the generic box.
822 square foot.
Yeah. Sorry, it's very special. That was a special generic box. Yeah. And
the big trend, as we've said many times, has gone this year to upsizing. So that 2 or 3 bedroom townhouse that gets you a little bit more space in the suburbs started becoming very, very active, as well as the single family home. And you made a prediction, or I guess before we get to that, you commented on a lot of people moving out of the city. So you mentioned a few different neighborhoods on the island and Sunshine Coast that had seen some big population growth in the last 6 to 12 months.
Well, when we get into this, Denny, I feel that we are at the start of the Great Migration, the urban exodus. Not that everyone's fleeing the city, but I think there's going to be a lot of movement. There's going to be movement into the city and probably more movement out of the city, but I think it's going to be evolving. Maybe at first, I just feel that there's a lot of people that don't own homes that do want to own homes. And there's a lot of people this year that already impulsively made a lifestyle move to a different city. And most buyers and sellers, they need time to think. So imagine if the impulsive wave happened right away. There are many people that need a year or two to digest and think it through. So I think there's going to be at least 2 years of people moving around due to lifestyle. And that alone will keep the market insanely active for a lot of stuff. So it's funny. I was looking at some stats in the U.S. to kind of get inspiration on how it might translate to BC and Canada. And, I came across this graph, and it showed San Francisco, prices down, or I think it was rents or price of rents were down 5%, but Oakland was up 11%, and LA was down. And basically the theme was that Californians are fleeing to smaller cities, and a lot of Californians are going up, Austin and Texas and Newark. I didn't know the place outside of New York. They're up huge. So there's a lot of data in the States about, places like Colorado Springs or Boulder, Colorado, the smaller cities blowing up, Newark outside of New York blowing up, the secondary cities blowing up, and just people moving out of the cities. And I kind of thought, how is that going to translate to BC? BC's a little bit of a unique apple. Toronto has its thing going on, but Toronto and Vancouver have a lot of similarities. And I think what comes to mind for me is we have Vancouver, and you have a lot of suburb options outside of Vancouver where I think most people will go. And then there's the Sunshine Coast, the Okanagan, and Victoria, and Kamloops, of course. And I think that The Okanagan wave is going to be strong for a long period of time. I think honestly, all those secondary cities are going to be insanely busy for a long period of time. The only exceptions might be an expensive market like Whistler or expensive Victoria real estate that's not as affordable, because I think a lot of what I'm talking about is driven by affordability. Yeah. But yeah, I think Kelowna is going to be insanely booming, and you're going to hear about more of it in conversations. I look at what's happening out in Tsawwassen, and that's in the city, but Tsawwassen's blowing up. Like there's just so much development going on out there. And when you have these communities that have small populations with, like they're increasing their population size, but like they're going to double their population size over a short period of time. I don't know what the length would be, but Tsawwassen has a lot. It's not a big community. It's got a lot going on. And same with Langley. So.
On the other side of that, though, we've commented multiple times on how slow downtown Vancouver has been in the last year. Mm-hmm. What happens there in the next few years?
Should we talk about what we've experienced lately? I mean, we have, we're one of those real estate teams that sells a little bit all over Greater Vancouver, with a heavy focus, I guess, in Burnaby, New West, Tri-Cities, and well, it's hard to have a heavy focus when you start listing off more and more cities, isn't it? So, but in the last 30 days, I've personally been involved in a downtown condo, land value in East Van, a house in North Van,
houses in Langley.
Houses in Langley, New West, Burnaby, condos in Brentwood. So it's seen a wide blend of detached and condos. And so it's nice to see that in the same city, you can have a complete variance of things going on. And what I mean by that is the downtown condo example on the extreme is it's off 20% from peak pricing, whereas the land value a short drive away or 33 in East Van, a detached home in East Van is at all-time peak pricing. And a two-bedroom condo above the SkyTrain in New West is about 10% off peak pricing. And a house out in Murrayville, Langley, is at all-time peak pricing. So you have, and I don't think Murrayville has any chance of slowing down anytime soon, nor does Walnut Grove or Langley. There are 7 offers that showed up on the last house that my clients offered on, and 6 of them missed out. So that means that there's 6 more buyers waiting for the next one to come up. So that's the market where I would probably make a big, bold prediction and say I think Langley is going to see a 15 to 20% lift in prices over the next 12 months and detached. And that's a big number, considering I think it's already seen a lift of at least 10% in the last little bit. But there's too much momentum. There's too much momentum. And that's not for necessarily the condos out there, the town. I'm talking specific detached. Yeah. What have you seen, Denny?
Well, I want you to answer my downtown question.
Oh, my downtown question.
What happens downtown?
Okay, so when
it's been very slow.
It's been, yeah, okay. So when I was showing a place in Cole Harbour in Yaletown the other day, and just to kind of prepare, I was kind of curious because it looked like there was a little more sitting on the market in Cole Harbour, and I thought there was maybe a little trend. So I looked at Cole Harbour, Yaletown, False Creek, and Mount Pleasant. And on a sales price to list price ratio, it was 96% in Cole Harbour, and it gradually went up to 99% in Mount Pleasant. But it was interesting. It was a small sample, so it's not really reliable. But what it was showing me was Cole Harbour was slightly slower than Yaletown. Yaletown was slightly slower than False Creek, and False Creek was slightly slower than Mount Pleasant. And I think False Creek, Mount Pleasant, they're probably equally desirable in a way, but the downtown core was slower. So, there are examples in downtown where certain condos have been hit 20%. And I feel that with the rates where they're at, with the increased call volume that we've had on our listings down there, there's a little more optimism. There's more people thinking that the pendulum's starting to swing backwards. And I don't see that pendulum getting worse. I think that the downtown condo market feels like it is, maybe there's luxury exceptions, but for, let's call it the more affordable under 1.5 price points, I think the pendulum is shifting. With maybe some exceptions like 33 West Pender that's over facing Tent City. There are some condos that are in the midst of a homeless problem that might struggle continuously, but like in, say, Yaletown, for example, I think it's coming back. Maybe not with a vengeance. What do you think?
I don't know, man. Who's going back there? Let's talk about demographics. Is it just investor world that's
I think
going
half half the investors will show up again, and then some more buyers will show up. But no, I don't think it's going to flourish. I just feel like it might be flat. I think it somewhere between 0 to 10% gain.
We were like a couple days ago, me and you were talking about prices comparatively to Brentwood, because we both have buyers looking in Brentwood. And we were talking about, let's use the word opportunity downtown, because that price, like those price points have come off quite a bit in the last couple of years, and the market's really slow, and you're getting a pretty similar product in Brentwood for a pretty similar price.
Yeah.
And I've never seen that before.
No, this is where we were kind of scratching our heads.
Yeah.
Like, what do you do? Because we were looking at, I was looking at a building 1325 Rolston that has, it's newer. I think it's 2000. I don't want to say the year because I might be wrong. But they had some nice condos under $1,000 a foot. And Brentwood had some, Brentwood, you get a little more bang for your buck, but under $1,000 a foot for a condo that's built after 2010 in Yaletown, pretty good, and with a view of the water too. Like that's pretty phenomenal. So my thought was, is that going to get worse? I think that feels like a bottom for what 1325 Rolston should get. You can get there's two bedrooms that I know of under 900,000 that are pretty decent right now, and we saw options in Brentwood that were arguably just as nice, but maybe add 100 square feet or add 50 to 100 square feet. So
and newer,
yeah. Brentwood was we can get into Brentwood in a bit, Denny. But I think the thought was Brentwood is changing so much, and there's such a variety of options there, and the new construction is around $1,100 a foot.
New construction, yeah.
And the
like pre-sale stuff.
And the existing is between, call it $900 and $1,100 a foot on the newer. And then you go back to 2010 or 2005 built stuff, and it gets down to maybe $800 a foot?
Yeah, $750
maybe
to
$750.
Yeah.
So my thought on downtown is I think that it might be a bit flat. It might have a spring surge and a fall slump. But I think it's going to creep upward a little bit due to lower mortgage rates and that first time, that lower price point buyer more buyers showing up. We'll see if I'm right.
I tend to agree. Where do we go from here?
I wouldn't mind chatting about the difference of areas and what we've kind of experienced and how hot this fall market has been and kind of why we have optimism for next year. So, there's certain things that happen in a hot market that don't happen. Let's call it last year. When it was it had a different feel. The subject-free offers come back, the bidding wars come back, and so in the last 30 days, I've had some experiences that tell me this is a hot market. So I had buyers offer on a Murrayville house. And when I first phoned the agent, at 9 a.m., one offer received. He's expected 3, maybe 4 at best by 10 when the offers are due. 3 showed up, and I got a call 30 minutes later, 7 received. So that agent genuinely thought 3 or 4 were coming in, and he received 7. So the what I would call the ghost offer, the sneak offer, the offer where the agent doesn't tell you it's coming, those are back. Yeah. Those are back. The market's so hot, I had to revoke an offer last night. I had to counter a great offer and revoke it because another haymaker ghost offer came out of the blue that was phenomenal. And whenever you revoke an offer, it's not a fun experience for a realtor, but you have to do it because it's for good reasons. And revoking an offer is basically, just to be clear, you are signing back a counteroffer to a buyer, and you are, after they've seen it and aware of it and digesting it, telling them that it's off the table and revoked before they communicate acceptance. And I've done this too many times. But it always comes with a story, and unfortunately, it leaves one buyer usually unhappy, and then one buyer usually comes out of the blue too late. So I don't think that's going to change in human behavior.
And honestly, that's something that a lot of realtors aren't really aware of.
No, I've done it.
Maybe explain what the process is, because I've been on the other end where I've had a client who wants to offer on something and the agent says, sorry, I can't look at an offer. We just sent a counter back. I said, well, is ours better? They say yes. I said, well, what the heck? Revoke it.
I've been in the same boat, and unfortunately, it's really difficult in 20 minutes to explain to someone that they can revoke an offer if they weren't aware of it before. And even when I've revoked offers on people, I've had agents, you can't do this. No, we're going to sign it. We've already signed it. Like right away, we've already signed it. They haven't, but at the end of the day, as long as you communicate that you are revoking the offer, it is null and void. It is no longer on the table. And the way that I've done it, by email, by text, like I cover my bases, and phone call. So I trifecta. And as long as you communicate it before they communicate acceptance, you're good.
Did you hear that, Carl? That's the James Garbutt revoking trifecta.
The revoking trifecta. Cover your bases. Phone call, because they want to hear your voice after you've given bad news. You got to soften it with the voice, right? So, but revoking offer is not fun, but it's something that could happen in a crazy market. Denny, what have you experienced lately? Anything that screams hot market for you?
Last night, we set a record in a complex. That is a hot market thing. We had a townhouse in Pitt Meadows. Awesome complex on the river in Pitt Meadows, 2007 built. There was a sale of almost an identical unit last week. It was 1,500 square feet, 2-bed, plus a den, updated kitchen, same as ours. They got 631. We got 675.
Ooh.
6 days later. That literally the definition of a hot market is weekly there's a new sales record.
I mean, we should explain how a market climbs. Yeah. And it's real, it's frustrating, but when Denny or myself might say, yeah, we expect townhouses and Pitt Meadows to go up 15, 20%. It sounds ridiculous, but it's not, because what it is a shortage of supply. And every time a product comes on the market, there are more buyers that usually the sale price of every subsequent listing gets higher than the previous one, because it sets a new precedent. Because how many offers showed up last night?
So the offer that sold, or the property that sold last week, had 4 offers. And so obviously there's 3 buyers that did not get that one. And 2 of those 3 also offered on ours. So we had 4 offers as well last night.
There you go. So in the next one, they're going to show up. And the thought is, if that next one's in January or February, there might be another buyer or 2 showing up as well. So, a lot of people think alike. And January is one of those shift months where more people show up, along with April, May, the spring wave. Townhouses. I think I will share, and you may have seen this, but you probably didn't read the cover page, the real estate board stats that came out. So just kind of, there's a few metrics that I like to look at just kind of to cover, the sales ratio. And the sales ratio is how many sales are happening compared, as a percentage, how many sales in a given month compared to how many listings are available or happening. So if there's, say, 10 listings of houses in a neighborhood and 2 of them sell in a given month, that's a 20% sales ratio. And when there's a 20% sales ratio above for a period of time, that's where prices start to creep upwards. And the latest stat package that came out, every product type, townhouse, condo, house in Greater Vancouver as a whole on a macro level was above 20%. I think the average was 27%. And townhouses were the highest at 40%, meaning they had a sales ratio where 4 out of 10 in a given month were selling. And it may not sound much when I say 4 out of 10, but realize that a lot of these listings are overpriced. So usually that means the good ones are going, and that is an upward trending sales ratio. And then for the lowest was condos. I think they were in the 20s or so. And detached was in the middle. But on a macro level, Greater Vancouver is 27% across all 3. And that's upward trending numbers. And
that seems high.
Yeah.
Like, have we seen higher numbers than that? As a full market, 27%.
Maybe 2016, maybe. Yeah. Maybe 2015. Let's kind of continue with this great migration kind of talk, because you just used an example of a townhouse in Pitt Meadows. And just to kind of highlight, townhouses are a popular product. Where do you think most townhouse buyers are going to find themselves in 2021? And where do you think the best options are? And what does that look like to you? What does the 2021 townhouse migration look like to you?
I think whenever buyers talk about like, this is my budget, where should I buy? I always the first thing I talk about is like, buy in the best location you can afford. So yes, the Fraser Valley is crazy right now. I think that translates more into Greater Vancouver in 2021. So I think cities that are slightly lower price points but closer to the city are going to... Poco is an example. So I think Poco, comparatively to its surrounding cities of Coquitlam and Port Moody, is undervalued. It seems like every year there's new amenities there. There's a lot of new construction, and it is a ton of young families moving to that neighborhood. I think Poco is a place that sees that same 15 to 20% run in 2021.
I agree.
For this type of product, for that, like, let's say entry level, newish, in the last 15 years townhouse that is 2 to 4 bedrooms.
Poco, and I guess including Burke Mountain too. I mean, a lot of people fall in love with those show homes up at Burke Mountain.
Totally.
Never thought they'd live there, but find themselves on Burke Mountain. Townhouses probably won't slow down this year. There's not enough of them in some markets, like New West, particularly north of the freight, like aside from Queensboro, there's just not enough of them. So my thought would be, they're going to be crazy busy, north of 10% increase in price by summer. For just call it the typical Tri-City townhouse. Probably areas like Klahani and Port Moody, anywhere close to that Suterbrick Village area, that's newer townhome, is going to be very desirable immediately. And that's where I think a lot of people will be drawn to those prime location townhomes. But then what will happen is as those prices go up, the more affordable options kind of lag behind and trickle up with them. So, that when I think I made that thought where the View condo and the Inlet in Port Moody will separate itself in price over time from the Coquitlam West condo by the SkyTrain station that doesn't have the view. That's more of a commuter's property. And my thought there is that yes, those desirable townhouses and condos will creep up, but it pulls the other products up with it because not everyone can afford that. Denny, I want to know specific predictions, any big ones, any bold ones, whether it's neighborhoods, property types, price points. What do you want to say about 2021 that might be different from what we said in the past, or you might be more confident of now?
Buy a house now, or you may never own one.
I've noticed, that's funny you say that.
Seriously.
I've noticed myself being panicky with clients too. Not panicky, but I'm not hesitating when I'm saying there's a good argument to buy the next house that comes up that meets like that you're okay with and going hard at it. There's in North Vancouver. Well, my thought, North Shore as a whole, North and West Van. I think those markets are going to be. Their West Van has been a bit expensive, but the lower price points, call it the $3 million or less, $3 million or less houses. Those are going to be very active because you're basically now getting apples to apples in value from West Van to a lot of neighborhoods in North Van. So there isn't that price gap between West Van and North Van that once existed. Edgemont's just as desirable as Dundrave area in a lot of ways. So I feel detached in North Shore is going to be insane. And if you particular hotspots, I would say for a lot of buyers, they like that Lonsdale feel. So I think it's going to be very hard to get a detached home with somewhat close to Lonsdale area. And I think the buyers that want peace and quiet, Deep Cove, I think is going to blow up. I've seen some big numbers out there, and I don't think that trend's going to go away. I actually kind of made a note here on Dunbar versus Deep Cove. Like, if you go back a few years, Dunbar was far more expensive than typical Deep Cove, but I wonder how those prices will reflect in 5-10 years from now. Is what and I haven't looked at the data. I just wrote a note. I wonder, like when I'm saying Dunbar, I'm thinking Far West Van, or even let's call it the Southland. Is it the Southland? South. Yeah, I don't sell out there very often.
Are you talking like Kerrisdale?
Well, I'm talking more south. I'm talking about areas that were expensive, but really don't. I mean, other than being west in Vancouver proper, how would that compare to, say, a Deep Cove now? Whereas Deep Cove, if you look at it, now it's getting more expensive, but 10 years ago, it's very blue collar in a way when you look at the homes. So I think there's going to be like in Deep Cove is the same as like a Fort Langley, same as a Beach Grove in Tsawwassen, same as South Surrey. It's call it a suburb paradise. The suburb paradises, and Port Moody being one of them. Those are the ones that I think what we're seeing. Like a friend of mine just bought a house for 1.5 in Lynn Valley, and that seems to be the entry price point for a detached in Lynn Valley right now. And it's hard to believe this, but I think there's a chance that Lynn Valley entry price point could be 1.8, by this time next year, or, by early 2022. And it's weird saying an entry-level detached home being in the 1.8s, but when you sell a lot, a teardown for $2 million, that's 33 by 122, anything's possible. So
the reason I say buy a house, and I'm talking about like single family house now, or you may never get one. There's an example right there. Land value in East Van is now $2 million. Yeah. Thanks to James Garbutt.
Thanks to luck and roundness.
And I've got a buyer that is looking in Poco, Coquitlam right now. They own a home, so they're not missing out on market gain, luckily. But we've been looking for 6 months, and we saw one this past weekend that is listed at 1.15. And so they're interested in it. So I've done a little valuation for them, and I'm looking at like the last 6 months of sales, and I'm seeing very, very similar homes in that neighborhood go from 1.1 to 1.15 to the last like 3 or 4 are 1.3.
And over how long of a time?
6 months.
6 months.
So I'm walking through that home, and
1.1 to 1.3,
and I'm saying I realistically think this is probably going to sell close to 1.3. And they're like, really? I'm like, well, the last 3 have. And there's probably a lot of buyers that missed out on those that are coming to see this one. And we're walking in on Saturday at 12:30, and there's probably 25 realtor business cards on the counter.
Yeah.
And that was the second day on market. They're listed on Thursday or Friday.
I had I had a different version of that. I mean, I showed a place in College Park, Port Moody, and it has a pending offer now. My client did not get it, but the comps were in the high 1.1s or 1.2, and this one was priced in the mid 1.4s. And it needs work. It's a full gut reno, and it probably got an offer $200K above the comparables. And the one that I was referring to in Murrayville earlier, the comparables were about 1.175, say early 2020 and fall of 2019, and it went for 1.35. So that's about 100.
It's almost 200, 175.
175 difference. And North Van is one of those ones where it's the data's just showing up now. But like, call it, I had a client look at a place and it got 10 offers and went well above list. So who knows what to expect? But we're both obviously confident and detached, and you made the comment, buy now or you might not be able to. Whether it may be true, it may not be, and we'd hate to influence your decision with such a big statement, but there's just a lot of they're not making more houses. So if you're looking at a neighborhood and you're finding yourself running into multiple offer situations often, it could be one of those climbing markets. And in the past, Denny and I have both had clients that have watched buyers that weren't in the market, that have watched what they're looking for climb 200,000 in front of their face.
And so we just gave a $200,000 example, but that's a much smaller percentage than what we're talking about. We're talking in 2014 to 2016, and buyers watch a single family home in, let's say, New Est go from 600 to 850.
Yeah.
Right. So that's a big percentage. What is that? 35%, 40%, something like that.
And it's getting there because you're 5,000, 10,000 short on a negotiation a few times over. And this is one of those moments where, I'd hate to be wrong or right, but myself, when I'm optimistic about the trends, if I was going after detached, I'd put the next high number. I'd put the next precedent on that offer if I'm in multiple offer situations, just because I feel that there's a run ahead. Townhouses, area to area, depends. Most areas are short on them, but there's certain areas in Surrey that are loaded with them, and they might be going against the grain. But I'd say, let's call it the Port Moody townhouse. That's going to be very popular.
The difference, though, let's maybe just outline why I don't think townhouses are going to, like we mentioned, the 15%-ish type of percentage for townhouses. The reason for that, they're building more and more and more every single year, right? There's always going to be extra supply that keeps coming onto the market that's newer, that is maybe a little bit shinier and fancier than the one that you bought that was 5 years old. They're not making more single family homes. There's no more land.
No.
Unless you're going like way out in BC. But there's no more land.
No.
Which is why the demand is so high right now. People have seen that, like we talk about this a lot. People have seen that gap between their condo, townhouse to house narrow in the last couple of years, and that is starting to go the other way.
It's unusual when you see a $1 million 2-bedroom, 900 square foot condo in Brentwood next to a 4,000 square foot house that's on its own land for $2 million, say, double that. Now that's not for brand new ones, so maybe a brand new one's $3 million. But my thought there is there's going to be a world where that house on land should be 5 times more than that condo, not 2 or 3 times more than that condo, or arguably 10 one day potentially. But that might be 100 years from now. And there was a time years ago where I sold all my condos and switched to houses, and then the condo market went on a run and I missed out on that boat. But I believed in they're not making more houses, so I did the switch. But at the end of the day, there's affordability and lending that come into play in the short term. So in the long term, I 100% agree. They're not making more houses. They got to keep going up. But in the short term, when you have foreign buyer's tax, you're not getting open markets, and you're kind of at the mercy of local affordability in a way. So sometimes you get those boxes in the sky that are worth half of what a house with land is. It may not make sense, but it does when you look at who can afford it and how many people can afford $1 million versus 2. Yeah. So I think we're both optimistic about detached. It's just we both understand that there's affordability at play there, and that's where the unknown comes in. Condos were hotter than I expected them to be over the last little while.
Yep.
Any other bold predictions for 2021, or did I skip something there from you?
Maybe should we touch on risk, buying and selling?
Oh yeah,
because I think we're at the point in the last couple of months where the trend is kind of flipping now, where people are starting to buy first again because of how crazy the market is. Let's say someone is upsizing from a 2 or 3 bedroom townhouse to a house. It's difficult to get into a house. So if you sell first, you may not win the next 3, 4, 5 houses that you offer on, and you may be homeless or staying with mom and dad, and that is never a fun situation. So a lot of people are transitioning into taking on a little bit of risk, like they did in 2016, 17, maybe late 2015, and they're buying first. They're waiting till the house comes up, or waiting till they get one, and then listing right away. There's risk involved. You probably are listing slightly conservatively on your townhouse or condo or whatever it is to ensure a quicker sale. But a lot of the houses now are selling subject free. So if you have a subject to sale, essentially you're eliminated. Even if you
Good
have,
luck.
Yeah, like it's just, even if you have, it's hard to like describe this accurately and not sound like we're pushing people that way. But like in most situations right now on single family, if you have subjects, your offer is not relevant.
The offers I dealt with last night both had deposits attached.
Right.
Yeah.
Same with the townhouse, right? In Pitt Meadows, the winner was subject free with a deposit attached. It's hard to, like, there has to be such a crazy price gap if you have a subject, right?
Absolutely. I've had more than expected conversations with people that are coming down the pipe in 2021 looking to move. So I've had more emails and calls come out of the blue. Hey, we like our house, but we're not sure it feels right. Now we're working from home. We need more space. We want to think about other areas. We're not in a rush, but we want to know, we need change, and we would love some direction on that. That's kind of like the vague conversations I'm having these days with people. And really the thought there is, if they're serious and want to move, you go like if they have a detached home, which most of these examples do, they are going to sell pretty confidently in a week if they take the list price advice that we give. So knowing that they can sell in a week because they're going to be running into multiple offers, the conversations that I'm having with them is, Here's the value of your current place today. It's going to change, so we need to reassess it at the time. Speak with a mortgage broker and use that value and find out what you can afford. Also, find out what you would qualify for on a bridge financing basis so that if you sell your place and the dates don't match up with the purchase, you know that you can qualify for that. And those are two different things. If you sell your place and get the funds of it to buy, what can you afford? If you sell your place but you don't get the funds of it until after you buy, what can you afford on a bridge financing basis? And then separately, it's good to know what you can afford with a suite as well, because that number goes up. So, and the thought there is for the typical dance of shift of getting a person into a new home, into a better home, is simply, if we're in subject-free world, do all the due diligence to offer subject-free and just have a long close and put yourself at risk to sell your place right after. So it's the risk a lot of people don't want to take, but it's the risk that it's the reality. It really is. It's the reality we've seen in the past, and we're seeing it again now. So that means that if you are sitting on a house and you want to buy up, you offer on that house in January, you offer with a 3-4 month close. The longer you can get, the better. And then you put your house on market right after. You don't mess around on price, and you sell it in a week, and hopefully you match up the dates. And that's the dance we do a lot. Usually it works out. Sometimes it doesn't. And it's frustrating when it doesn't. But I am optimistic for the people that are going to do that dance in the next 6 months, because I feel it's upward trending, and it's a nicer dance to do when it's upward trending. But it's not a fun dance to do when they announce a foreign buyer's tax and then the prices get hit 10% and you have people buy high and they have to sell low. So that was an instance that happened there you go. Any comment on that at all? Like mortgage rates are low. Good to speak with an independent broker or your bank to find out what's available, or look at ratehub.ca to get a quick snapshot of it. That's what I do, just to kind of stay in tune. But yeah, I've had clients, I think, on the low end get a 1.7 5-year fixed, which is insane. And on a 30-year amortization, it's about $370 per $100,000 of mortgage. Get $100,000 or $1 million of mortgage for $3,700 a month. That's cheap money to hold $1 million worth of mortgage.
HSBC just announced a 0.99 rate. And I haven't seen the terms of that, like what penalties are to break it and all that kind of stuff, that they're probably going to make up most of that money or a lot more on the back end. But
I think they implant a chip in you for the term of the mortgage.
But it'll probably force other big banks, RBC, TD, Scotia, to be slightly competitive with that, right? Mm-hmm. 1.7 to 0.99 is a big difference. Mm-hmm. So maybe we see a little bit of a rate war. Not that, like we already have for the last 3 years, but like maybe even more in the spring.
Could be. I think there's going to be a lot of stories coming up, and we'll be. I don't think there's a whole lot more I want to cover. I just like recap some thoughts. I think detached in East Van, Vancouver, North Vancouver, Port Moody, Tsawwassen, Langley are going to see all-time high prices, arguably month over month, starting January, February. Areas like Burnaby are not going to see all-time prices because they had their moment, with exceptions of certain neighborhoods. I'm talking about the government roads and Deer Lakes. They're not going to see all-time highs. They're not going to see those 2016 prices yet, but they're going to come back. And I think the one-bedroom suburb condo is still going to be flat, maybe a little bit soft, maybe a little bit up. The two-bedroom condo will have a little bounce back, maybe 5 to 10% for the box in the sky. But the nice condos and townhouses, I think, are likely to see maybe a 10 to 20% lift this year. And for some of these properties that we're referring to, that gets them back up to their old price. And for some of these, that gets them to a slightly new record price.
I agree. That's it.
Yeah, we'll see.
Other than government road, I think you might be surprised by that kind of stuff.
Did I offend you with that comment?
No, not at all. Not at all. This is half my show, Jamie. I'm allowed to have an opinion, okay?
When do you think Michael Bublé will be able to sell his house for how much he paid for it?
I don't know, 65 years?
I think it's going to be 100.
Maybe more. Just with our experience, so we sold a house on Phillips July, August, something like that.
That was a nice one, yeah.
That sold in 3 days, and we had 12 showings, and it got full price.
That was $2 million.
Yeah.
I think $2 million is very different than 3.5, 4 in Burnaby. But yeah, I agree with you. I think the twos in Burnaby, the 2 million-ish price point, 2 to 3, is going to be an active price point that was not much more active this year in Burnaby than it was before. Agreed. So if you're sitting on a house in the 2 to 3 range, you've been waiting, 2021's your year. And arguably, I think 2022 is probably going to be better too. That's it, Denny. That's our market update.